Small and mid-cap US tech witness, quick recap to see where we are. Will this bring to a rotation to Chinese tech stocks? Fed Reserve officials actually signaled that they will start raising rates in March to battle inflation. While it's incredible that Nasdaq 100 rebounded from around 15,200 on 10 January all the way to 15,970 on 13 Jan, but we know that Nasdaq 100 still closed down over 2.5% and closed around 15,500 on Thursday, 13 Jan 2022. Here, this is just a quick recap of what I mentioned in my video on 11 Jan. Basically, tech, especially the small to mid-cap tech, remaining weak on the downside. This is what I have repeated several times since December. Dow does seem more resilient for the last 5 days, but is this really a case? Best to watch the charts for different stocks, but so far we know that Boeing, Chevron, Caterpillar all did recently very well, except for Goldman Sachs, which was down 2%. But what did we see from US tech stock performance? A quick look shows that the performance on 13 Jan 2022 shows Sea Limited down 10%, DocuSign down 6%, Robots down almost 10%, Grab down over 2%, Cloudflare down over 13%, Roku down 5%, Lemonade down 6%, Athletes down 2%, Snap down 10%, Coupang down 4%. Didn't I caution myself since 3rd Jan 2022 on my Reddit platform? My view remains the same for small to mid-cap US tech stock. That is, these stocks, their price structure remains weak. This is definitely not a time for me to be a hero and buy the dip in small to mid-cap US tech stocks. For me, I will be patient because my risk-reward profile warrants me to wait for a better price, and I am willing to miss out if this small to mid-cap US tech stock rebound. Wait, let's think through. Are there anything I can buy in the meantime? Quick look of the Chinese tech stock performance on 13 Jan 2022 shows Alibaba down 4%, NetEase down 4%, Baidu down 4%, Huya down close to 6%, Douyu down over 7%, and Bilibili down over 10%. Tuya down close to 7%, UP Fintech actually down over 5%, Futu down over 3%. So we note that the fall for Chinese tech stocks on US platform actually falls ranges from 3% to over 10% for all these Chinese tech stocks. It is still many people wish list for the capital rotation into Chinese tech stocks from US tech, but we do know that pricing wise, some Chinese tech stocks do look attractive. With USD renminbi at record low level, meaning renminbi has appreciated a lot despite USD strength, I do believe that there are more tricks out the sleeve of China, meaning the PBOC, People Bank of China, can potentially be more aggressive in terms of lowering their interest rate. What we can look at is that the Shanghai Composite Index actually has hardly moved, having locked in only around 13% return over a 5 years period. Shenzhen Index, on the other hand, did better than Shanghai Composite Index, locking in over 40% for the last 5 years in terms of return. Something to bear in mind is that supply chain disruption may ease in the second half of 2022. Not only did one party like the insurer mentioned in the CNBC report, we also note that Federal Reserve Jerome Powell actually mentioned that as well, noting that factors like cooling consumer demand, healthy inventory levels, and increased shipping capacity in the second half of 2022. Market consensus right now seems to indicate that inflation pressure will start to abate in second half of 2022. That's good news for China particularly. Why? Why is that? Because this also means that there's less need for a stronger renminbi to insulate the inflation pressure on China's domestic economy, giving more support for easing policy, meaning the PBOC can potentially inject more liquidity into the system in China, as well as lowering the interest rate to make business having lower cost of funding. Like what I mentioned previously, for the US tech stocks, Federal Reserve rate decision will continue to weigh on US equities. I do not expect the winners in US small to mid-cap tech stocks to be over, while the bets on Chinese tech seems logical right now to me based on valuation, but the downside pressure still remains due to US-China battle, like what I mentioned in several of my videos, and overall tech valuation in US being affected by market sentiment, meaning there might be a case whereby US tech valuation collapse and potentially pull down China tech valuation as well. For interested parties in Chinese tech, one should remain on high alert to watch out for China's monetary policy as well as the tech regulations. This is an important year for China, meaning 2022 is very important because for Xi Jinping, he will seek a historic third term starting in 2022. And I will watch the news in China market closely like a hawk because of this particular development and its potential implications for the general economy and the stock market. 2022 will be a very interesting year with volatility occurring in both US and Chinese tech stocks. As always, this should not be construed as any investment or trading advice. Thank you.